It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, talking your property news as we do 7 days a week, even on a grindy old Monday after the weekend. And you can hear us on iHeartRadio, Spotify, Apple Podcasts and Amazon. And if you're a new listener, don't forget you can join in on the conversation anytime, really. Just email us to myrealestatepodcast@gmail.com because we would love to hear from you on this Monday, the 18th day of November. Now, this spring, the property market is seeing a surge in activity as both investors and first-time buyers target affordable suburbs. Interesting data from PropTrack and the Australian Bureau of Statistics that is showing a 30% increase in new home loan commitments from investors and a 2% rise from first home buyers. Now, hotspots like Melbourne's Tarneit and Sydney's Marsden Park offer affordable house prices under $1 million, attracting in the buyers. And as for units, the Sydney Parramatta and Melbourne CBD lead in demand, driven by the affordability and proximity to the city. So those are pretty interesting stats as we right now go to Sydney to catch up with Daniel Starr from, well, a couple of locations, Merrylands and Wentworthville. And good morning to you, Daniel. Welcome to a Monday and to the Real Estate Breakfast this morning.
Thank you very much. Thank you for the lovely intro.
And you were telling me that you've been going there for about 50 years, so lots of real estate.
Yeah, we've been in the business for over 50 years now, so we've certainly had a lot of relationships in this region, and we've seen the market here evolve and the location, and physically we're seeing a lot more high-rise even in the heart of Merrylands. It's starting to look more like Parramatta than it ever was. So we're seeing a lot of more high-density changes, and that's there to accommodate the new Australians entering our shores.
Now, just talk a little bit about Merrylands and Wentworthville, just for those that geographically they're not too sure where that is in relation to the CBD of Sydney.
Sure. So Merrylands is really the next suburb to Parramatta. It has its own station which connects through to the city. And then you've got Wentworthville, which is 2 stations away or 2 suburbs away from Parramatta. So we're really here in the geographical hub, as we like to call it, and also we're right in the centre, bang in the centre of the basin here in Sydney. So we're, I would say, a medium-priced marketplace. Most sales prices range from as low as, we've got sub 300 sales, but we've got around the 400 to say 600 for apartments, and then you're looking for houses somewhere between that 9 and up to 3 million.
Okay, well, let's just go back to this PropTrack report, because most in-demand suburbs for first home buyers looking for units, they've got a bit of a breakdown. And this is for the units. Median sale price, see that Parramatta takes out the number 1 position, $625,000. And then at number 6 is Merrylands. And the median sale price for a unit, people might be surprised, $485,000. We were having a bit of a conversation off air. The reason why Merrylands probably isn't in number 1 position, because it's a cheaper unit, probably because of the volume that Parramatta is trading at.
Yeah, that's true. And look, Parramatta is a huge hub. It's, I believe, some years ago I heard it was the 5th biggest economical centre, and that's bigger than some of the CBDs around Australia. So you look at some infrastructure that's been put in place and what the government's doing with a lot of their, they're centralising a lot of their bigger departments, police departments and other departments, Sydney Water. They're really looking at a focus of bringing their workforce to the middle of Sydney so travel time can be, a lot shorter, but also it's an affordable area in retrospects to other parts of the city.
And first-time buyers, $485,000, people obviously wanting to transact at that price point. So how busy are you in that market at the moment?
Very. Look, we've really seen a real kick in of the bottom end of the market. For instance, I'll give you some quick stats to give you an idea of how it's changed. In 2017, we've seen a real change in apartments. Apartments were really popular prior to 2017, and off-the-market sales were flying out the door. Then we had responsible lending, where a lot of the investors really withdrew from the market because their borrowing capacity was restricted by a bit of responsible lending. And we really seen a real flattening of the market. We've, of course, had COVID-19 in between, which wasn't popular, being in common areas around each other. So again, and rents did drop as well. So from an investor's perspective, I suppose it wasn't that encouraging. From a first home buyer's perspective, it was probably COVID put a little bit of a pause on a lot of things. But more recently, we're seeing, 260,000 people that was scheduled 2023, 2024 coming into our country, and 5% of those people entering our country are going to Parramatta region.
Wow.
So that's a massive amount of volume that we've got to accommodate. Hence why the local governments here have looked at infrastructure increasing that was identified earlier, but it was something that where it's evident if you drive through Merrylands today, if you were here, let's say 10 years ago, it's entirely different suburb altogether.
And what is the bigger area, Merrylands or Wentworthville?
That's a great question. I would say at the moment, though, when neck and neck, I think the infrastructure, I think Merrylands is ahead at this moment. They were in a two-horse race. But now I'm finding that the infrastructure in Merrylands is great. You've got Stockland that has invested with their shopping centres here. You've got some big companies which have stepped in, A-Land and other companies that have stepped into Merrylands, seeing it's so close. It's just one suburb from Parramatta. Wentworthville, though, there was a shopping centre there in place. It got demolished. It was going to be going ahead. It didn't. It really stepped Wentworthville backwards a little bit. But generally speaking, it's predominantly now residential homes and a scattering of around the station, more saturated around the Westmead region for apartments.
All right. Well, we're talking about those first-time buyers getting into the market there, $485,000. When we come back, we are going to find out what is happening in the housing market. We'll do that next.
From powerful and up-to-date news to professional real estate experts with the latest property trends on the Real Estate Podcast. It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market.
And it is a Real Estate Monday. We're in Merrylands and Wentworthville talking with Daniel Starr there. His business been running for 50 years. Just before the break, we were talking about those first-time buyers. $485,000 can get you into a unit. And Daniel, let's have a look at the housing market, because the sweet spot at the moment for a house is between that $1 to $1.3 million, is it?
Yeah, it is. And we're seeing the big push for that price point because we're seeing affordability, of course, going from a 2% interest rate up to 6.5%, 7%. Whatever we're paying right now is a considerable difference on the bottom line to your mortgage repayment. So we're seeing a real push down. So we're seeing buyers that were maybe 1.5s, 1.4s pushing down into the 1.2s and 1.3s for safety. So it's created this real logjam in and around that range. And we're seeing some really great evidence. We had one there in Merrylands, for instance, which is a typical 4-bedroom, 5-row home, 556 square metre block. This time last year, that would have sold for, let's say, maybe 1.1. We sold that one for 1.220. So considerable difference there. And then we've had one there in Greystanes, which again, we would have sold for around 1.1. We sold for $1,330,000 via auction.
Okay. What about the construction? Development feasibility is always a bit of a dilemma for developers sort of playing with the numbers. Have you got enough of that sort of development meeting the demand? Probably not.
Yeah, we actually do need it. Ironically, we need the development. We have buyers that want to buy the finished product, but for a developer, the feasibility isn't quite there enough. It's making those cost of construction, of course, increased rates, It's all made that margin a lot slimmer, which makes it tougher for the developer to produce the product. But then what we're having noticed is, as I just mentioned, if a developer's buy a property, say 1.2, 1.3, they're often getting outbid by the first home buyer or the residential buyer who's prepared emotionally to pay a bit more for the same product. So if the margins aren't right for a developer, it's a business decision. From a first home buyer or a residential buyer, it's an emotional and it's a home. So it's a totally different mindset and a totally different angle of purchase.
And those first-time buyers, of course, looking towards next year, rate cuts, they can't come soon enough. 2025, is it going to be the year that we get 3 or 4 rate cuts? Well, it's possible. Everything's kind of on the plus side. Bearing in mind we've got to get over the Christmas, New Year's spend, so hopefully that doesn't muck things up. So what are you looking forward to in the first quarter of 2025 next year?
Well, I'm hoping for more stock. Hopefully we can get more properties on the market. I think it also affects the bottom line of the vendor. Like the vendors, we've noticed in the last couple of months a real pullback on people putting their properties to market because they've got to go somewhere else too. So if the properties aren't out there, a lot of buyers had put their heels on and wanted to wait for rates to come back for next year. But really, you should be buying now. If I'm to give any buyers a leg up, I would be advising to buy now, because if you buy now, yes, you'll be paying a higher interest rate, but when everybody else comes on those lower interest rates, it's going to push the market upward. And I see a real growth for the market in 25, particularly when we get maybe around that middle part of the year when they're all predicting, as you said, rates to come back a little bit more, maybe twice. So I really believe if you're a buyer right now, I'd be getting into the market right now. I'd love more vendors to come to market right now. We haven't got enough. We are starting to run short, and leading into Christmas, I think those who are on the market right now are going to do well. But still, I think next year, I think prices are going to certainly increase.
Yeah, it's being echoed in a lot of different corners around Australia. Get in by pre-rate adjustments. Before those rates come down, get into the market, because otherwise you're going to be competing when things start to heat up a little bit. Hey, fantastic stuff. I have learned something this morning about your market, Wentworthville and Merrylands, and it certainly seems that first-home buyers are getting into that $485,000 price point on the units. Thank you, Daniel, for coming on to the Real Estate Breakfast, and enjoy your Monday.
Thank you very much, and it's been an absolute pleasure.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
They'll get to the point where they've got 5% plus cost. If they can avoid stamp duty by getting various benefits there, they'll do that. And then they'll just get into the market as soon as they can. And, for some people that works, and that's a good thing to do because they can't outsave the market.
Is there a bit of bias towards commercial, sort of leaving the residential part hanging?
Craig, you've hit the nail on the head. The power of an owners' corporation actually lies with the strata committee, but they're not the decision makers, or they shouldn't be, in a well-managed scheme.
I see the trend of people moving to the Upper North Shore. One point I'd make probably on the contrary is I don't think it's purely an affordability issue. I think there's attractive buying up there, and you certainly do get more for your money.
That we are meeting and some really great opportunities to pick up a great unit in a good location, and hopefully at a fairly good price that they can hopefully get some good capital growth over in the first few years of owning.
We connect you to the best real estate information across Australia. The Real Estate Podcast.